Very good afternoon, everyone. Welcome to today's uLaw webinar. The webinar topic for today is Disbursements Demystified. Today's webinar has been accredited for 1 hour of professionalism CPD credits in the provinces of Ontario, New Brunswick, and British Columbia. Please to use this particular title, Disbursements Demystified, and you should be able to get your 1 hour of professionalism CPD credits by logging this in your respective provincial law society portals. At all times, please to use the chat window to ask either myself or my support staff any questions that you may have pertaining to today's topic. Given the nature of this webinar and the presentation being a CPD, I'm pretty much going to stick to the very specific agenda that we have. So like every other uLaw webinar, today's CPD session has this very specific agenda to talk about disbursements. What are these disbursements? How best to manage them? The different opportunities that you have from a financial perspective of how you can disburse or have these expenses taken care of on behalf of your client from your own business's financial vehicles. So for example, if you have a trust account, being able to pay for these disbursements right out of the trust account, the benefits of doing such a thing, looking at paying disbursements from your general account, which pretty much seems to be the norm across legal offices. And of course, when you're doing that, keeping in mind how best you can manage these disbursements from general. The important data aspects or components of that particular transaction that needs to be recorded so that it's available to be reported at a later time. Confirming, as I mentioned at the top of the webinar, today's webinar is accredited for 1 hour of professionalism CPD credits by the provinces of Ontario, New Brunswick, and British Columbia. When we talk about the different types of general disbursements, we'd look at some very pragmatic examples of the types of disbursements that may lend themselves to be paid out of the general account. Such as the billables, unit rate, mileage. And we'll also talk about the expectations that the law societies across provinces have when it comes to how best you report these disbursements, because they are a recoverable expense, but since they show up in an invoice, they do make a part of themselves as part of that revenue, right? So in terms of the expectations from the law societies, we'll talk about the different reports, the different documents that highlight the recording of these disbursements, including taxes in some cases. Some disbursements may have taxes, some disbursements may not. So we look at all those different data components and how best you as a legal business owner can transact these disbursements out of the current accounting vehicles that you have, financial accounts that you have with regards to your business. So we'll start with kind of a quick definition for it, and I have delivered this particular webinar a few times before. And it's always fun to talk about disbursement, right? From a definition standpoint, of course, we've taken the wiki definition of it, but I always stick to the layman's term because that's the simplistic definition that I like to provide in these webinars, is really looking at disbursements as an expense that you as a legal office will incur, but it's an expense that you incur on behalf of a file or a matter for a specific client. So expenses that are related to a client, and if I were to get granular, it's not just for the client, it's for a client's specific file. The other set of the expenses, of course, would be your office expenses, such as your rent, paying for your laptop, paying for stationery, paying your law society fees. These are expenses that you incur as a business to keep the lights on, to run your business, and you cannot transfer these expenses directly to the client. But if you're paying on behalf of a particular matter, depending on the nature of the matter, these disbursements vary, right? From real estate to small claims, the cost and the magnitude and the number of disbursements that you may have vary, right? For example, if you have to send out a fax, or if you have to take multiple photocopies, or if there's travel time involved, or if there's an application fee involved, these are the types of expenses that you don't need to pay for to keep your business going. But these are expenses that you need to pay, that you incur because you're representing this particular file, right? Now, some disbursements, such as fax, you may decide, to disperse the client but not charge your office for it because you have a fax machine in your office. Or if you had to travel to the closest Walmart or a Staples to get that fax delivered on behalf of your client, then you need to ensure that you're not only dispersing the customer the right amount, but you're willing to be able to record the actual expense that you incurred to pay for that disbursement. Okay, this is where it gets a little bit more interesting when you talk about disbursements. From a law society standpoint, the bottom line is that they expect you to manage and maintain proper accounting books and bookkeeping, which really is about recording these transactions as and when they happen, and being prudent and knowledgeable about the data that needs to be captured that would give the auditor and the law society, when and if and they talk about these audits and review your books, gives them a clear picture of the audit trail of how that information was captured, when it was captured, and how best it has flown across your accounting books, right, from ledgers to journals. That gives them a better picture of how you as a legal firm have handled and paid out these disbursements. And many times, having a better handle on disbursement also means a better handle on the profit and loss of your own business, because these are expenses that you do incur on behalf of your client, and it's very important that you do everything that's necessary to safeguard that you are able to recover this back from the client, either through a retainer agreement that you may have upfront, or at least ensuring that there's enough literature in an engagement letter that talks about the rules that govern that agreement between you and your client and the responsibilities that your client have to pay you for these disbursements on time. Okay? So we've kind of established that disbursements are nothing but expenses that you pay on behalf of your client and your client's matter. Now comes the next important question about how do you manage the payment of these disbursements. If this was your office expense, I'm sure there's quite a few different ways in which you probably would pay for it. And disbursements is no different. The only difference is that typically you don't pay for your office expense from a trust account, because the trust account is this one account that has been primarily, again, unless it's for real estate and there's a reason for it sometimes, but majority of times you don't pay for your rent from your trust account. The trust is primarily maintained for your clients because they're giving you money in advance as a retainer with the leap of faith that you would be able to draw out of that retainer as and when you can reflect the effort and the disbursements that you've put in on behalf of that file, right? But if you look at how you manage disbursements that are, since it's related to the client, you do have the opportunity to look at both the trust account and the general account as possible accounts to pay for them on behalf of this client. But before I get into how you pay for it, how you recover this, I'd like to highlight, of course, about what is the data that's being recorded as part of these transactions. And there's definitely a method to this madness. The reason why we talk about the data that needs to be captured is because that's the very similar data that is expected to be reported on these Law Society documents. So simple things, let's get started in terms of, let's say you have a disbursement. The first thing you, of course, want to really talk about is who is it for? What's the client's name? What's the file number or a matter number, if you have one, that is unique to that particular situation? Especially if you're doing this in a manual method of using Word document and Excel sheets, and let's say you maintain your own Excel sheet of file numbers and all the different financial transactions. If you are using a legal accounting system, then you do have the opportunity to create clients and matters, and disbursements just become part of that matter. So it's easily captured, but if you're not doing it through such a system, which is fair, you still need to be aware that you have to capture this data. So who is the client? What was the matter? When did this particular disbursement get paid? When did this transaction actually occur? Right? So of course, everyone is very happy to know the date when this particular transaction or disbursement occurred. Then the next question is, like anything else in life, how did you pay for it? Because that helps for you to reconcile your bank accounts. Because if you see $180 being taken away from a specific account and don't really have a transaction or some sort of a recording of what that $180 was for, and you give it, let's say, 3 to 5 months, and if your memory does not serve you well, then unfortunately when you look to reconcile your bank account, you're going to be continuing to scratch your mind and really dig deep to remember and recollect what that $180 was for. Right? This is the classic pain point that a lot of legal practitioners go through, or any business owner that's looking to manage numbers go through. So really important is the date. When was it paid for, this disbursement? How was this paid for? So did you pay this out of your trust account, which is fairly a little bit more simpler? If this was paid out of your general account, then your business may have multiple general accounts. You may have an operating general account, which is your general account. You may write checks to pay for these, right? Or you may have your own business-related credit card that you may have used to pay for it. In some cases, you as the individual may have paid for it using your own personal money. It becomes even more important why you need to capture how you paid for it, so that you can appreciate and understand that if you have such transactions where you have paid for it from your own pocket, then the business, even if it might be a sole practitioner, it's still separate entities. The business still owes you that money. So for you to be able to recover, not just from the client sometimes, the ability for you to recover the payment to your own self is important. That's why we capture how was it paid. And the third important aspect, of course, is what was the reason? Now, the reason, as I mentioned earlier, just gives it a better holistic definition for that particular transaction. It gives meaning to that transaction, makes it easier for you to reconcile at the end of the month, knowing the reason. It was an application fee along with the file number, gives more value to that data, gives more information than just a reason saying, I paid this expense. Right? If you notice, when we look at our bank statements, there are certain financial institutions who do a good job of giving us some level of description about the vendor that we paid any transaction for. There are other financial institutions that would simply just put a random alphanumeric sentence with just the number being deducted from the bank account. The purpose of what I feel one of the important components of a legal accounting system or any accounting system is that it gives you purpose to write the reason for any of those transactions, so that when you reconcile your books with what the bank has to say, and when the bank does not have a proper description to go behind, you now fall back at your books to understand what that transaction was for. Okay? So what are we capturing? We're capturing the client, the specific file or matter. We're capturing the date or when this was paid for, how was this paid, and of course, within how, you can get granular in terms of trust general, and within general, you can get granular in terms of which account. And then finally, the reason for that particular payment. Now, if this is a general account, we'll get a little bit more granular there. We also talk about the taxes. So there's an amount. Of course, the biggest data that you capture here that's not mentioned is the actual amount of that disbursement, right? So if this is $160 or $113, is it $100 plus $13 tax, or is it just $113 without taxes? So it's important that you capture the actual dollar value with enough segregation between pre-tax and the tax amount. Okay? Now these are, of course, the data elements that need to be captured within a disbursement. Different data sets from the recording of these data elements gets reported accordingly, whether it's a disbursement ledger or a disbursement journal. Okay? Each of those financial documents telling you your own story. Okay, so when we talk about paying it, how are we paying for it, comes the next question. And this is where it becomes interesting for a legal business to have a little bit more of information about the opportunity that you have being in this business to take advantage of. So the law societies across Canada that we can definitely talk about have done a great job of fighting the fight for a very long time of earning this right for legal practitioners and protecting their right to safeguard their money by introducing this concept of a trust account. Okay? The concept of trust, as the word resonates, is the ability for you as a legal firm to be able to take money in advance even before conducting the service or the work as a leap of faith, as a trust that not only gives your client a certain confidence, but it also internally to your legal firm gives the confidence that you can recover if something were to happen and you're unable to reach the client, and you've heard horror stories where you've done a lot of work and you're trying to recover a payment for an invoice and the customer disappears. So then that's just lost revenue. So you do have this wonderful vehicle called a trust account. And I do apologize. I know I am preaching to the choir, but I would definitely like to stress upon the point that you do have this trust account as a vehicle, as a financial vehicle to take maximum advantage of. And one such advantage is the opportunity that you have that to pay for these disbursements right from your trust account if you can. So the next time you're looking to get a retainer, maybe based on knowledge or maybe based on a certain ballpark, either include the possible disbursement costs that your ballpark estimate to be, or get kind of a rounded retainer that kind of accommodates more or less the disbursements. And of course, if you've got more retainer, more than what you've spent and what you've serviced, you always have the opportunity to refund any retainer amount that's not being used, right? So there's no harm there. So you would find that perfect balance based on the matter, based on the type of area of practice, a certain retainer amount. And if you do that, I just said do that, but if you do happen to do that, you now have the ability to pay for that disbursement. The next time an application fee or a court fee or any disbursement that you have to pay for on behalf of that file, you can now pay for it right from the trust account. And why do that? What is the advantage of doing that? The number one advantage of doing that is reduced bookkeeping. is because it's reduced amounts of transactions that you need to record. So when you pay right out of your disbursement, it's a single transaction which says this money has been deducted from the trust account. So if you pay the $150 application fee from your trust account, it shows as a single line item in that trust ledger and journal, of course, as $150 being taken away from that particular account. And if you reconcile it with your financial institution's record keeping of that same trust account, it would show the same thing, that $150 was taken away. Easy peasy. There's no need for additional transactions to be shown to earn that money, because this, in many ways, if disbursements is really not a revenue that you're looking to make out of the customer, it's really not your money to begin with, then it's just simpler for your own sanity of record keeping to pay it out of trust. But there are definitely certain rules, certain aspects of the types of disbursements that do play a part in considering the trust account. And we'll get into that in the next slide. But let's say you do not have a trust account. You have not signed up for a trust account yet, and all you have is an operating general account. Then if you do intend to pay out of the general account, or maybe you do have the trust account, but you still would like to use the general account because you're used to doing that, and then you definitely need to be aware of the added responsibility and the added transactions that you have to keep in mind in doing so. What's common between both these is data elements that you need to capture, which we spoke about earlier. The client, the file, the date, etc. Right? And when it comes to the general account, of course, it's important that you capture the appropriate taxes involved. Capture the method of payment. It's even more important. So even when you're paying out of trust, you, of course, you want to capture, was this a trust check? Was this, how did this get paid out of the trust account? But it becomes more important when it's general account because, as I mentioned, you may have multiple accounts that you may have paid this out of, such as your general account, your credit card maybe, or even your personal money. Okay? We spoke about how the trust account is so great that if you do the disbursements, pay out of the disbursements from the trust account, reduced record keeping, right? So let's flip the coin and let's figure out if you were to transact this out of the general account, what are the steps that you do have to take? First and foremost, if you're paying for disbursements out of general, you do take the ownership and the responsibility for paying for this expense ahead of time. Because you first pay for it, then you have to remember that you invoice this particular transaction to recover it. That's the best way to recover it, is by generating the invoice. So ensure that you've recorded that particular general disbursement payment with all that information we spoke about. Make it a habit based on the retainer, on the engagement agreement of how you would recover it. Some disbursements, based on the type of client, the types of areas of practice, are recovered in a cycle. It's not recovered as and when it happens. For example, we have corporate clients that who accumulate disbursements over a period of time and then sign up an agreement to recover that after every 2 weeks or at the end of the month. Some customers of ours have the agreement that if it's an ongoing matter, that they would certainly raise all the disbursements only as and when it happens, because they're paying for it and they don't want to bleed those disbursement costs. And hence they have an agreement where you can recover and raise invoices for all the disbursements that are happening as and when they happen. And there are, of course, other matters where you recover both fees and disbursements as and when they happen. So there's various cycles, various instances when these invoices need to be raised, and that reflects how soon you can recover these disbursement costs. Okay? Perfect. Now that you've generated this invoice, now you send this invoice to your client. Now, depending, of course, on the agreement, you may have different revenue collection terms. You may have an immediate collection saying, as soon as I generate an invoice, I need it to pay right away. But then, it's many times that's just a distant dream. You at least have a net 7, net 15, net 30, sometimes net 60 payment terms, which means that you are going to have to wait for at least those 15 to 30 days to recover that payment that you made on behalf of a client. So the reason why we stress upon this again and again, because this kind of goes hand in hand with your own internal cash flow management aspect of your business. Maybe a single disbursement really does not hurt the bottom line, but if you're going to be doing multiple disbursements over a day or a week or a month, they all accumulate, and you need to be well guarded. You need to safeguard your own financial interest and every way possible to recover these expenses that you incurred ahead of time. So once that next 15, 30 days is completed, if you haven't received, of course, then you have to follow up. Some legal firms may have certain interest that gets accumulated after that initial period if the payment has not received. Some firms don't do that. But this is how you would have to recover if you're just operating out of the general account, no trust involved. If you have paid the disbursement out of trust account, and as I mentioned earlier, that's just a transaction in the trust account. You don't have to deal with it. You don't even have to worry invoicing. There's this third example, which is interesting, which is neither here nor there. So let's say you have a retainer. You do have a retainer, and you accounted for the disbursement cost, let's say. But for whatever reason, you still want to use the general account to pay for that disbursement. The only advantage that you have, or a major advantage that you do have with that third option, is you still need to generate an invoice because you have paid it out of your general account. So let's say you paid that same $150. Let's assume you got $1,000 as an initial retainer, and you had a $200 disbursement that you paid out of general account. You did not pay it out of trust. Okay? Now what you have to do is generate the invoice, just like here. You have to generate the invoice having captured all of the details. That's a given. But in the first case of trust, you did not have to generate the invoice. The second case of just the general account, you had to raise the invoice and then wait for the client to pay you. It was the onus on the client to pay you. But in this third example, where you have a retainer, but you paid the disbursement out of general, you have continued to raise that invoice. But once you've done that, the next onus is actually on you. You do not have to wait for the client to pay you. Instead, you have what's called as an eligible trust transfer as a transaction where you would move, it's your responsibility to move the eligible amount. And I underline the word eligible because you need to be very careful if you're doing this manually about the amount that you're transferring. It has to be the exact amount that's reflected in the invoice. And that invoice may include disbursements and fees, and that's totally fine. But this third opportunity that you have as a legal firm, if you have a retainer involved, is to do this trust transfer for this $200 from trust to general. Okay, so this is slightly an added transaction. But you do have control over the money. You're not waiting for someone to pay you. There's the lesser opportunity for non-payment. But it does come with some additional steps. For example, if you're doing an eligible trust transfer, you would transfer it from your trust account to your general account. Certain legal firms use checks where they write themselves a check, right, from the trust to general, and then they would have to transfer it. There are other firms, especially today, do a lot of electronic transfers. And if you are a legal practitioner in the province of Ontario, so today it's specific to the province of Ontario, and if you do a trust transfer from a trust account into a general account, then an additional step that you're required to take is fill out this form called Form 9A. And you must have certainly learned about this. But just sharing with you, even if it's the concept and the context of a disbursement, that all these rules still play. So when you do that electronic transfer from a trust to a general account, you fill out this Form 9A, which asks you for the trust account, the general account, what was the amount, what was it for, and then you have to sign it. And during your audit, the auditor may actually ask you for Form 9A. Okay? Now here are all the transactions that we've spoken about. And the Law Society documents, again, it's not rocket science, but there's a certain method to why they're asking for it. And all they're asking for is based on the real-life transactions and the data and the details that you capture. So they're not asking for random things, right? They're not asking for things that you don't know. They're asking that you record those things that you know, but to be captured and reflected in a report that's easier for them to understand. So the first step, of course, you have the ownership for is to record these transactions. The second responsibility that you have for your own sanity is to record these transactions as soon as they happen. And the third, for your own convenience, is to choose a platform that allows to report the recording. First and foremost, allow you to record it, but then make it easier for you to report these recordings. And that's based on a platform or a product that allows you to do that. And legal accounting is purpose-built for legal practitioners. But there are many such softwares available, including uLaw, but that's for you to make a decision based on your convenience and comfort. And these transactions is what we're going to come into next. Before we talk about these types of disbursements. So we've spoken about the details that you need to capture in these disbursements. We've spoken about how you pay for these disbursements. I'm going to, of course, this particular presentation is being recorded and will be available to you as early as Monday next week. But a quick glance at the type of disbursements and a little thumb rule, if you will, or a little tip that we like to give you when you're considering paying for these disbursements, either out of trust or general. So we talk about billable. If it's a billable disbursement, of course, both trust and general are opportunities that you have. If it's a travel time or a mileage or unit rate, then specifically general. And we've kind of summarized in simple terms after that. We've said if your recovery of expense is on the actual, then both trust and general. If it's with either a profit or a loss margin, so for example, if the disbursement is actually you paid for, photocopies, $50, but then if you're asking for $75 for whatever reason there may be, a service fee, or that's your convenience fee, let's say, if you're asking over and above the actual payment of disbursement, then you cannot use the trust account because it would not match. You use the general account. In some cases, if you have a third party rep wanting to represent you in a different city at a court and you need to pay for them, we've seen legal firms take a bit of a loss in the disbursement margin because it was never accounted for originally, but they still wanted to ensure professionalism when it comes to representing their client. And then they went the extra mile to pay another person to represent them at court. So if it's with a profit or a loss margin, whether it's a recovery of expenses or third-party consulting that you're paying, then kindly use the trust for paying disbursements. If this is billable and primarily where you're paying the expenses on actuals, then certainly consider the trust account as well as an option to pay for these disbursements. Awesome. So hopefully over the last 30 to 35 minutes, I've made sense, maybe preached to the choir, maybe repeated myself many times, but hopefully I've driven home this reason for you to consider a trust account as a possible answer if you have any problems with recovering these disbursements and it's becoming a headache to your cash flow situation. Now comes the fun part, is it not? Where you're being asked to record and report this in these fun, wonderful, colorful ledgers and journals. Of course, the Law Society has definitely done a good job of documenting the expectations ahead of time. So if you look at LSO or British Columbia, Alberta, or other provinces, New Brunswick, so on and so forth, and if you visit the law societies, the audit requirements, the bookkeeping guidelines are well established. Especially if you're joining us from Ontario, then you know that the LSO has very good bookkeeping guidelines, both for paralegals and for lawyers. From a financial standpoint, they're the same. Where they differ is in the area of practice. So they highlight a lot more about real estate and things of that nature in the lawyer's bookkeeping guidelines handbook. And in the other side, you have a lot of examples such as small claims and landlord and tenant board, for example. But from a financial standpoint, in terms of ledgers and journals, they all are the same. And when we look at the different documents, and I'm specifically focusing only on the disbursement aspect for today's webinar, there are a maximum of 3 to 4 documents that you need to keep in mind. If you are using a trust account, then you will be asked to provide the disbursement ledger. Okay? Now we've seen this with your trust ledger, and this is pretty much the same. If you've paid for a disbursement out of the trust account, then it gets automatically reflected in that trust ledger right under disbursements. There's even a column for that. Okay. And of course, if you have a general, then you have general ledger. So here are 2 documents. And then comes the next pair of documents, which are under journals. And again, if you have a trust account, there's a trust disbursements journal. And if you have, of course, you have the general account, we have the general disbursements journal. Now, we've discussed this in my previous webinars. Some very subtle differences between a ledger and a journal. There's some commonalities in terms of the date, in terms of the description of what's being received, right? Like the particulars, if you can see, and then the amount. But the journal indulges in a deeper question in terms of how was it paid for, right? And who was this paid to? Whereas the ledger is pretty much about what happened, when did it happen, and what was the amount. Okay? And this is why it's important when we capture these details, as I mentioned earlier, that we cover pretty much the top 5 questions in terms of data collection, so that then you can spread that data according to the template that's required across these different law society documents. So for example, if you notice in this particular trust disbursement journal, it not only captures the date, it captures the method. So if you look at Nestle Lawyer of $565 as a particular check that has come in through that invoice, you notice in my ledger, it only talks about the date, the money coming in, or the transfer to general. So you basically paid it from trust to general. It has the amount. Whereas in my journal, clearly says that I wrote myself a check and the check number was 001. So if you have to go back and reconcile, and if you have to go back to look at how did this come about, you know that there was a check of 001 that was written to yourself, because this is paying yourself. And that's how money was transferred from trust to general. Okay? And the other big difference that you see between a trust and a general ledger or a journal is this added column of your jurisdictional tax. In this case, we've taken it from the province of Ontario, where it has the harmonized tax. Of course, depending on which province you come under and you're paid, you may have the GST and PST showing up. And you can clearly see in this particular general disbursement journal, we're not just happy to know the date, the method, who it was paid for. We also want to understand what was it paid for. What was the amount pre-tax? Were there any taxes involved? And certainly there was. And what was the total amount? And this particular HST bucket gets recorded and is being looked at separately, because depending on how much of HST you received and paid, that automatically reflects when you file your tax in terms of how much of money you should either receive back from the government if you've overpaid, or you should pay back the government if you have collected more, right? So if you are especially looking at a manual system to do these things, these are some of the important data components that you have to ensure are part of that report that you generate, maybe using a Word template, right? And then, of course, it comes down to economy of scale. If you have to do these repetitively for many clients in a month because you're busy and your law firm is busy, then it's a wise investment to look at a software that can help automate many of these tasks. But if you're doing this as a side job and you have, let's say, one matter a month, really not much of work, then, of course, you would make a better decision based on the convenience and comfort and the volume. And if you're doing this manually, which is perfect, you still have to be in line with the expectation from the Law Society. Now, there is also the component of a fee book, which is actually a compliance document or a bookkeeping compliance document. Okay, the fee book is an interesting document because it captures not only the fees, so the legal fees or the bill that you generate as part of your invoice, it also captures the disbursements that were billed, because it's pretty much taken out of your invoice book, otherwise called as fee book or invoice book, all of the different invoices that were generated and what was inside that invoice. If it was $600 of an invoice, was it purely fees? Was it fees and disbursements? How much was the tax involved in that overall fees that was billed? So if you look at this particular invoice for Jackie Jones, you see that the fees that was billed was $100 and the taxes that you charged the client was $13, and the total for that bill was $113. If any disbursements were included, let's say there was a $100 application fee with no taxes, this total would be $213, and the 100 would show up here. So when we're talking about disbursements, we now spoke about 2 ledgers, 2 journals, and now the 5th document, which is the fee book, which is another area where the disbursements that were generated are being captured and reflected. Okay? And of course, I mentioned this earlier, this really comes down to economy of scale, cost, comfort, convenience for you and your legal firm to consider. But if you are considering a software to help, please do consider or have within your search a legal accounting software, because these types of softwares are purpose-built to help you manage the accounting aspect of your business and not just the practice management aspect of your business. Because in Canada, accounting compliance is a must, and it helps. Taking the initial learning curve, depending on which software you take, each software has a learning curve. Each software also has supporting individuals and businesses that run to help you, run the software for you, enter the data for you. Because end of the day, whether it's a manual system or if it's a sophisticated cloud platform that does this for you, it's as good as the data that you put in a timely manner, right? Because the software is not intelligent enough to really know each and every aspect of what you've done in your business. Yes, it may capture and connect with your bank, but allocating the funds and reconciling it, it still needs the data inside it to help with, so basically it's help me, help you situation with any software. So knowing that there's a standard template that needs to be met, and it's just a matter of discipline and repetitiveness and a bit of nuance based on the type of areas of practice that you focus on, it may not be a bad thing to consider that investment. Okay? Alrighty. So with another 8 to 10 minutes remaining here in my webinar, I'm just going to utilize this opportunity to showcase to you a simple example. And if you can just give me a second here. I'm going to be using the uLaw product as an example to kind of walk you through the capture of these disbursements, maybe talk about 1 or 2 situations that we discussed, and the ledgers and journals that get generated behind the scene. Okay? So, as any legal accounting system would have it, let's first start with the entire perspective from a client's perspective. So, I'm going to say Ms. Jane Dorson. Living on Toilette Avenue in Ottawa. And let's just go ahead and save that client's information. So we're trying to build a context. As I said, the disbursement is for a client-related expense, and even more granular is for a specific file or matter for a client-related expense. So we've now got the first context that everyone does in a legal firm, creating the client information. So you've got Jane. Now let's create a matter for Jane. Of course, you can do your audit-related conflict checks and all of that, but I'm going to avoid all of that for today. I'm going to assume it was totally cool to work with Jane. And yeah, let me just go with the wills and estate. I don't know if there are many disbursements, but I'm just going to fake it. Okay, so we've got preparation of will. What's interesting is if you look at any of the software providers, they would always provide you with this opportunity to preset your disbursements, right? If you look at taxes and rates, you can preset these disbursements ahead of time, whether it's for mileage, for legal counsel rate, postage. Set a standard, of course, and then based on the matter, you can tweak it as in how you go. So we'll take the first example of having a retainer and paying out of trust. So I would go ahead and accept the retainer. I'll say add new retainer, $1,000. Let's say I got a check from this client. And I deposit it into my CIBC trust account. Give them a receipt, or I may have collected it over phone or sent them a little email with them to pay for it online using a credit card. You have many options. Very important when you do accept a retainer to generate a retainer receipt. I'm not going to go into that, but I'll quickly show you. So keep in mind that you generate the retainer receipt, send it to your client, then everyone has proof of the exact details of that retainer. Now let's say that $200 application fee came about, we spoke about. No fees so far. It's just the first thing ever happened was you had to pay $200 to get this whole thing started. Of course, I know it makes no sense in the context of Wilson Estate. Please bear with me as I fake my story in the next 5 minutes out of this. So you would go ahead and say, let's say you want to add a new disbursement to this file. So you could see all this is in the context of the file. This is not a random expense. It's an expense on behalf of Jane for her Wilson Estate matter. And the first option we have is to pay this out of trust. Let's go and do just that. I'll say it's $200. I'm going to write a trust check. So you would then say, oh, does that mean I need trust checks? And the answer is yes. You do have to go talk to your financial institution and order for these trust checks. Payment for, and this is where you talk about the date. So let's look at the fields that were being captured here. It pertained to what's being needed or asked for across ledgers, journals, fee books, and all those different compliance documents. So what was the date? If this is a previous date, it can be backdated. What was the amount? And if this includes a certain tax, you would put the total amount here, right? The method of payment. Typically, application fees don't come with tax. What was the method of payment for your journal? A check number for your own reference. A description so that it gives a bit of reasoning. So application fee. Who did you pay this to? It's not a random person. So you paid this to, let's say, Ministry of Finance. And you may have multiple trust accounts, in which case you want to be certain it's the same trust account, hopefully, that you deposit the $1,000 retainer. Now, if you have a quick look at this trust receipt, you're going to notice that the trust receipt just reduced itself from $1,000 to $800. Okay? And there's absolutely no reason to recover anything here because money in, money out. But what's important is to look at our ledger. If I go into my compliance, which is pretty much a click of a button here, and let me choose the monthly ledger. I'm looking at the trust ledger right now. And right at the bottom, if you notice this, and let me see if I can increase the font size. You notice that the $1,000 came in as we entered that check number for the retainer. And you notice just the way that the trust ledger was required, you have a disbursement or an invoice payment of $200 that was taken out right out of the trust account, leaving your balance right away at $800. Okay? This is one example. There's no general nothing. It was just purely trust to trust. Let's say in this same case where you do have a retainer involved, you pay for another disbursement. This time, this came out of the general account. So let's say this was a mileage. Okay? And let's say you're charging the client a pre-tax amount of $200, and $226 is the total after tax. You report the same. This came out of your, let's say, general account. Just to make it easier, let me just call this postage. So this came out of my TD account. Now I've just dispersed $226 out of my general account with a retainer still being in play. And if you notice, the receipt has not dropped from 800 because it does not happen automatically like the trust disbursement. But you notice that the projected balance has dropped, and of course you do need to generate an invoice, which is a very important step that we discussed. Next, raise your invoice. Yeah. Let's go ahead and generate that invoice, assuming that you have the ability to generate it right away. And if you notice, we pretty much give you the opportunity here to invoice either just based on disbursement, dockets, or only disbursements. I'm just going to stick to dockets and disbursement for now, and I'll skip the preview for purposes of time, and I'll generate that invoice. So this was specifically an invoice that was generated to recover that $226. And this is the third example we looked at, which is where you don't have to wait for the client to pay you, but you most certainly need to do what's called as a pending trust transfer of the eligible amount. Now, just from experience, having done this for about 11 years now, this is one area where I find legal practitioners sometimes fail to do this transfer, either in their bookkeeping system or even worse, sometimes even in real life. They do all the good things about generating the invoice, but they forget to move the money from trust to general. But this is where it's important that you do this in real life, but also tell your book accounting system that you've done it. So let's move that 226, again, keeping you compliant. You can't move a random number here of $400. You're moving this from your trust account into your preferred general account. And as I mentioned before, for our friends here in Ontario, if you do that electronically from one bank to another, or even within your own financial institution, there's a Form 9A that you need to fill out, which we pre-populate for you for your convenience. You still need to print this or have this handy because you do need to sign it. So this was the third example where you didn't have to wait for the customer to pay you. And let's look at that journal entry. I am reaching the top of the hour here. I'll go back to my trust ledger. If I go back to my Jane Dorson, you now notice that there was a trust transfer that was done leaving the trust account. So it was not a receipt, it was a disbursement of $226, now leaving your balance in trust at $574. Now if I go into my trust ledger, might as well I would do the disbursement. So this is my general ledger document. If you notice the Jane Dorson matter, this is the general ledger where it says a postage disbursement of $226, and through the payment of $226 by moving it from trust to general, leaving your general account balance at zero. Right? And if I look at my disbursement, you notice clearly that to Canada Post, we made that $226. And what's important to notice here is the amount is being split between the pre-tax and the tax. And the bucket of $26 gets calculated separately. And as my last report for the day, yes, the copy of this webinar is very much available. It's being recorded, will be available to you as early as Monday. So please do check out our website, our YouTube channel. And of course, like everyone else today, you can like, subscribe, and thumbs up on it. And you get notified every time there's a CPD webinar that's recorded and available. And here is my fee book. Through that one single transaction that we entered, we automatically have 3 to 4 and pretty much all the documents that you need with the data pre-recorded, including our disbursement of $226. Okay? And these are the documents and these are the templates that you need to remember and ensure that you have a handle for how you want to go about it. I'll show you the taxes because that's always a question that's being asked. Because I paid HST, I'm just going to generate the HST document. If this was GST, PST, either or, you'd have them separately collected. Here's the $26 that's separately being calculated, where you owe the government, as per this data, $500. Okay? All right, so I am at the top of the hour here, and I don't want to take more than what I've bargained for, but I definitely want to thank everyone who joined me today for this webinar titled Disbursements Demystified. It's for 1 hour of professionalism CPD credits in the provinces of Ontario, British Columbia, and New Brunswick. And hopefully you were able to take home the agenda that was meant for as part of this webinar, which is really understanding the concept of disbursements, how best to manage them, the ability for you to pay for these disbursements from Trust General, and the data elements that you need to capture, and finally, the reporting requirements and the documents that you need to generate by capturing the data elements in different formats. Okay? If you have any further questions pertaining to today's webinar or have any suggestions or recommendations for future webinars, please do email us at support@uLawPractice.com. If you're interested to learn more about what we can offer you, please visit us at uLaw.io. That's all from me today, folks. Hope you have a great weekend. We'll talk to you next week. Thank you.